There's a world out there, it's a digital maze where dollars move in mysterious ways. Complex systems, rules, and regulations. The payments professor sparks revelations. No need to fear the Fed now.
Hey, everybody, and well, welcome. Let's see what's about to happen. I'm Kevin Olson, also known as the Payments Professor. Got some of my friends in payments here with me. Let's see, where do we start? How about Ted Hoff? Ted, why don't you say hi to everybody and introduce yourself?
Hey everybody, founder and host of Fintech Confidential and the CEO of a company called Voliere, an advisory firm that helps financial technology companies connect with financial institutions worldwide.
Andrew?
Yeah, Andrew Gomez. I'm a senior advisor at Paylume. We're a Belgian-based strategy, education, and implementation company.
Okay, and Paul?
Hi, I'm mostly retired these days. As you know, Kevin, thanks to you, I'm now doing my own podcast here in the UK. But I would guess I've been in the industry for like 40 years in payments, so I'm kind of a payments nerd now, and I'm trying to get better, Kevin, as days go on. But yeah.
So you're in payments recovery, but let's go ahead and let's plug that podcast, Bite-Sized Payments, right?
Thank you very much indeed. Yeah, bite-sized payments.
Absolutely. Everybody should be checking it out. If you're not subscribing to Fintech Confidential, to Bite-Sized Payments, the Payments Podium, you need to be out there subscribing. We are working our butts off to make sure you guys are getting the latest in payments. Now, you may be wondering, what are we all doing here together? Because I'm sure you guys have seen Andrew before on all of our different podcasts too. We all decided to get together, and we decided we are going to solve today all the problems that are happening in the world of payments. We're going to tackle European payments first, but when we had this idea, there weren't as many problems in the US in payments because Trump hadn't taken office and Elon taken over the realm of payments, yet. So we're going to probably solve US problems while we're at it too. I guess where do we start? Andrew, you want to tell us the first European problem we need to solve?
Yeah, I guess we have a lot of problems in Europe, payments and unpayments related. But I think back in early January, the first part of the 4-part regulation, the instant payments regulation, came into force. That was basically mandating that various payment service providers be able to send and receive instant payments. And over the next, I want to say, 18 months or so, a bunch of other parts of that regulation will also come into force. So there'll be easing of sanctions, screening, rules around pricing. Oh, wait, I think it was the pricing that came into effect first. Yeah, that was first. And then in September or October of this year is when the send and receive capabilities is being mandated for all payment service providers. And then, of course, the most challenging one of all of that is the verification of payee, or also known as confirmation of payee. That's coming up too. And then, of course, we've also got the PSD3 and the payment services regulation also coming in sometime down the line. So it's going to be a busy couple of years in Europe when it comes to account-to-account payments.
One of the things I think is interesting is that they started with here's the carrot. We're going to give you the pricing to get you all excited about it. No, by the way, the stick comes later if you don't take a bite of the carrot.
Yeah, on the one hand, I understand the overarching goal of the European Commission and regulators in general in Europe. They're unhappy. I think the latest statistic was something around 15% of credit transfers in Europe are instant, right? And that's for all of SEPA. Now, obviously, those numbers are very different depending on which market you're looking at. In Germany, it's much lower. In Spain, the Netherlands, it's much higher. That said, I think Europe kind of struggles from this issue of, there's nearly 30 markets in the European Union. And when you look at the Eurozone, it's actually even more, not in terms of the actual countries that use the euro, but countries that can make euro-denominated payments. And so there's just a massive coordination problem, many in the same ways, like in the United States, there are 50 states and therefore 50 state regulators. And then on top of that, there's a federal level. So I think Europe still hasn't really solved the overarching issue of how do we make things more efficient? And that's one thing where I think the payment services regulation is coming in, right? We're going to move away from directives and into regulation. And the reason why that's really key is it means that the national implementations of directives will no longer be patchwork. they'll be unified because it'll be a regulation, not a directive, which basically gives national regulators some wiggle room. And so we're getting away from that. And I think that's a good thing, generally speaking. But yeah, when you've got dozens of countries and regulatory bodies, it makes things quite messy and very difficult.
Some interpretation here, because on the U.S. side, we don't have directives, we have guidance. And I said we call them recommendulations, because our guidance we treat like it's a regulation, even though it's just a recommendation, but it gets treated that way. And I guess that's what your directives is, what became the mandate. And is the mandate because you had the disparation in the people who would use it versus those who were heavy into the instant payments?
Let me give you a quick example. When SEPA was established, it was effectively not a de facto statement, and we now have effectively 13 different flavors of SEPA, depending upon which currency you're in. So, if you have a directive, you can go, that's lovely. Thank you very much, Kevin. But I kind of want one that's a bit like this rather than the one that you actually said. So you end up with effectively right now 13 different implementations and very, very much a patchwork. And in fact, I would go further than that. I would say if you look at it and you extend that on and you say, well, let's just talk about Europe rather than get into the EU, what's the EU debate? Let's just call it Europe for a second. If you think about that and you go, well, how many ACHs have I got? Well, I've got like, 2 effectively. How many immediate payments have I got in each country? How many high value regulations? How many pan European regulations of how many pan schemas have I got? You end up with about 100, and it's like, it's a bit like Andrew was saying, you think you're going down a path to do, to make it easier. But in fact, what you have is immense fragmentation. In all my time in payments, I don't know of anybody that's stopped doing anything. So let's turn that one off. So you just add, I've got SEPA in, so I'll do another one. We'll do another one, which is okay if you're in the US and you got like 5. But when you got 100, it's like, now this is not fun anymore. You've got to try and work out how we do less, because at least we forget we move money from A to B. And that's kind of it. But I think one of the things that I think that's on top of this, and I think it came up last week a lot, was fragmentation is a problem, but kind of so is sovereignty. And so how do you balance these things? Because if you're in France, 85% of all your transactions, roughly speaking, go through all the traditional French payment rails. Not SEPA, not SEPA Inst. And that's the same in Germany and the same in other countries. It's about 85%. On the other hand, what we've seen very recently, and I'm not a politician, but you did mention the gentleman's name, there have been some geopolitical statements that have made a lot of the regulators extraordinarily unhappy. And this has been a conversation that's been had for a while, and I'll lay it out in a different guise, but I think you can join the dots. If you build SEPA and you create the standards via the EPC and you create the rule books and all, that's great. Well, that's inside of Europe. If you have a card network and those rules are not created inside of the European framework, and should there be a situation where that no longer becomes interesting or complex or difficult, then you don't have sovereignty over, 80% of the traffic that goes on for payments in any country. So all of a sudden, sovereignty, which came in through that we want to be independent, want to have our own card network, we want to have SEPA Inst and replace cards with SEPA Inst and all that type of conversation, all of a sudden it's become very real. And it's like, you know what? We want to be in control of all our own payment methodologies and not be latent to any country outside of Europe.
So like a euro only or a eurozone type payment system basically happening for instant, making SEPA more in that way.
Yeah, I think the there's been a constant challenge. I can't remember, Andrew, is the three or four different attempts at having a card network in European. You could,
My guess is three, but I might be wrong. It might be four.
and let's be honest, none of them none of them have been a success, right? So the idea would be for the bulk of the volume, not by value, but by the sheer volume of transactions, they're actually over, card network rails. So the question is, well, what would I do in its place? And I think the question is, can I create my own wallet? Can I create my own um, network? Can I use, SEPA Inst as that rail instead? That's the conversation that's right back at the fore again, and we'll see whether it's really real.
Okay, this is fascinating. Now, one thing I think needs to be mentioned too, as you said last week, because last week, and we were talking beforehand, you were actually at a central bank conference, and that's one thing I think people watching this and listening to this need to understand is when you get central bank involved, that gives wholly totally different points of views when you have multiple central banks coming in to say, hey, this is how we want it to happen, and then multiple central banks talking to each other to get them all to agree, in which case SEPA, you do have that happening and agreeing. Whereas in the US here, we usually, I hate to say it, we usually have our central bank says, this is the way we want it all for all of you to work with us.
Yeah, and we had DG FISMA, the head European regulator. We had
Sorry, Paul. You might want to say what FISMA stands for the non-Europeans out there.
okay, so all the regulators have DG, Director General. FISMA in this sense effectively means payments, but so he's the top regulator for payments and financial services in the whole of Europe. And I'd like to say what he says goes, but it's kind of not that simple. But in the end, he makes the decision and he takes it to government and says, I'd like you to vote for this, please. So he was the guy that did PSD2, PSD3, SEPA Inst that Andrew was referring to earlier on, as well as, in fact, the Fed was there talking. But, FCA from the UK, Financial Conduct Authority, effectively the UK regulator, they were all there. And of course, they don't say what a bank should be doing to operate. What they're saying is, hey, banks, this is the sort of thing that we're thinking about telling you to do. It's probably a little bit harsh way of putting it, but effectively that's what they're there for.
Oh, wow. Okay, well, that's pretty cool, though. Still, just to be able to have that type of audience and that type of thing happening and get those different points of view. Because, something else I want to go back to on the instant payment mandate is one of the biggest concerns is whenever we talk instant payments, we talk money moving faster, is the fraud aspect of it. And what I love about the instant payment mandate is the confirmation of payee aspect, is that you're going to have the mandate for the confirmation of payee. I don't think that it removes fraud by any means, but I do think it helps to resolve fraud. Do you really believe, though, that people are going to be able to be ready to have that aspect in place? And where exactly does that part come in? Isn't that something that's like later down the line, like later this year before that piece is put in place?
Yeah, so it comes, is it October 9th, I want to say? Something like that. That sounds about right. Um, yeah, there's a lot of players out in Europe that are already working on this, whether it's the ACH operators or whether it's private sector companies that are going around figuring out how to make these connections. And what's interesting is, the instant payments regulation is mostly instant payments, but the confirmation of payee or the verification of payee, as we're officially calling it, that's actually not just for instant payments. It's all credit transfers, so batch and instant. And so what's going to be really interesting there is how that's going to work from a process perspective. How are institutions going to upload payment files, get a return from their bank saying, hey, here are the list of transfers where the names didn't match or, something happened. I'll be really curious to see how that works. But I think fraud is kind of for lack of a better metaphor or analogy, is it's really a game of whack-a-mole. You can't, but it's not 9 holes you're covering up, right? It's 30, and you still only got 2 hands. So is it good that you cover up one or two? For sure, right? You better to have one or two covered than none. But as you said, Kevin, is it going to solve fraud? Clearly not, right? If we know anything about fraudsters, we know that they learn quickly what does and what does not work, and then they exploit what does not work very quickly. And what doesn't work, they just stop doing. So it's not the case that you institute, verification of payee in Europe, and we say, okay, we're done. We can move on to the next issue. Um, that said, it's also very complicated, right? Because, uh, you know, as Paul mentioned earlier, 85% of payments go over the regular rails. And you know what? For that really simple case, it's fine. But what happens when it's cross border? How is that bank gonna connect to the service provider, in Lithuania when they're in Portugal? What network are they going to use? How are they going to make sure? What are the definitions of what defines what is a match? And the reason why I picked Lithuania is they've got some really interesting characters and little symbols above their letters. I mean, there's rules to deal with this, but the general point here is verification of payee sounds simple. We all understand what it means conceptually, but when you dig down, it becomes a lot more complicated in terms of how it actually works. And automating this is really important because, again, when big employers are sending out payments, batch payments, and they get a bunch of callbacks because a name didn't match correctly, someone is going to have to fix that on a Friday evening before going home. and they're
Right.
going to have to be prepared for that.
And I think there's, I mean, so I'm physically in the UK, as you know, Kevin, and, we brought out faster payments in 2008. And it wasn't long after that we were clamoring for a confirmation of payee story. And we noticed it made a change, but it just meant that people moved elsewhere, as Andrew says. I think what the more subtle thing is to look behind some of this is to say, okay, and I'll use the UK as an example because I suspect it's going to go elsewhere pretty soon. Is pretty soon if you are part of being defrauded, and I think it's 85,000. Andrew, keep me honest here, but if it's less than 85,000, the bank pays. That's it. Now, um, it,
I
then
think it's up to the bank, right? There's a certain level. Is it 85,000 is the limit in the UK?
yeah, I'm
Okay.
pretty sure it's 85,000,
Yeah.
and it's the bank. So if I end up in a fraud scam and it's less than 85,000, hey, send the receiving banks. You're on the hook to sort this out. I'm pretty sure it's 85, but put it this way, it's a lot. It's a lot of money. Now, the other side of this then becomes what happens if you turn around and you say, it's not Andrew, it's Andy. And it go a simple example. I say, no, it's Andy. I want it to go to Andy. He says, no, I don't. Send it anyway. Now, at some point, I suspect it's going to switch to say, well, you overrode the system.
Yeah, agreed. I mean, if you sat there and you got the feedback and said, "Hey, you're not sending it to Andrew, you're sending it to Andy," that should put more responsibility on you because you made that decision.
And that is not true yet, but one suspects that it's not very far away for the very obvious reasons that we can all think of. On the other hand, the regulators are saying, we've got to quash this. And their logic is if they throw these tools back onto the banks and say, hey, you guys sort it out, otherwise you pay anyway. And then the question is it frankly a cost of sale for the bank, or are you going to fix it? Well,
Cost of sale, and they'll figure out every reason to stop a payment from going through so that they don't have to incur the risk.
And you can see exactly how that would play out. And if you imagine, most of the fraudulent activities now are not technical; they're more socially engineered frauds. So if you're the person that has been involved in that fraudulent scheme and you've been social engineered, you're going to press the button.
Yeah.
My best mate Mary's leg's just broken. She needs the money. Send it to her now. Oh, don't spell Marie like that. You spend it. You're going to press the button. So I think that's hard to work out how that will go. But you can see the rationale for one thing, and all those people in payments are going to go, well, hold on, there's more down the line, right?
I mean, I'll say like over Valentine's Day, I started noticing that like 2 or 3 days before, and even a couple days after. Because yes, I do check my LinkedIn on the weekends. That's life now these days. Because Valentine's Day was a Friday. Um, I saw banks talking about, hey, here are the kind of romance scams that we're seeing. Make sure you think about this before you're sending money to people. And I think one thing we kind of forget is, or we don't mention it as much. In the end, the weak link is almost always the individuals behind it. It's not the technology. It's not the banks. I'm not saying they can't do more or that the technology couldn't improve, but in the end, as Paul said, if I'm convinced that this person, loves me and needs to buy a flight to wherever to meet me, I'm going to send that money no matter what, because I'm convinced. It has nothing to do with my bank or the technology enabling that. So, I think consumer education and market awareness about what are the scams, what are the telltale signs, um, that's really important. And that's a job that unfortunately is never finished. It's always just continuing and moving on to the next, weak point or type of scam that scammers are advancing.
Hey, I kid you not. My ex brother in law's ex wife's mother, 3 times in a row, sent money to men in Jamaica. 3 times in a row. Hey, got scammed once, then did it again, got after getting scammed, and then did it again, like month after month after month. And it's like, when are you going to learn? I mean, but just did it over and over again. So I mean, it shows the weakest link is, the heart wants is what the heart wants. So you're absolutely right about those Valentine's Day scams, and the people are the weakest link. It doesn't matter what type of software we put in there, because I mean, in those cases, the names would have matched. And they did, I'm pretty sure, exactly to what, she thought they were sending them to. So, I mean, how do you fix stupid?
Well, I think that I don't know how you answer that one without being rude, right? So I'm going to completely ignore it and move on. I think the thing is, it's table stakes. It just, what makes their life just a little bit harder means they have to have a real bank account. They have to go through the real KYC. We all know that they can fix that really quickly. On the other hand, they have to do more work. The more work they have to do, it kind of slows them down a little bit. But I think in the end of the day, it's just table stakes, and it's just the minimum you can have.
Well, see, here's something else for us, I guess, on the US side of things. You guys, it seems like going cross border is so much easier. When we start going cross border from the US, it suddenly becomes friction and complicated. And it's not something that we're able to do quickly because, OFAC just is something that is terrifying for the American banker. That's just a fact. Once we start mentioning OFAC and the American banker, they start, they start getting worried. They start getting scared. There becomes more checks that have to be in place. It starts incurring more costs too. So it just seems like you guys have figured out how to have, especially the instant payment, happen with less friction and at a cost too, because like you said, you have the pricing there already, whereas we can't seem to get that piece figured out yet.
I think the thing is, I would guess that a high percentage, like again, 85, 90% of all the traffic in America is in America, right? I mean, it's such a huge. But if you're in Belgium, as Andrew, I think is at the moment, then it's a small country. All their neighbors are all around them. He's got Holland on one side, got France on the other side. So I think what you have is much more likelihood that any bank will be working cross border at some level. So I think it's more in the psyche of European countries to be moving cross border, whereas in America, I mean, so much of it is interstate, if you will. I mean, it's a different, it's a different set of needs. So I think we kind of have to.
Yeah, I would. Oh, sorry. Go ahead, Ted.
I was going to say, Paul, Andrew, should we be looking at it as being less cross-border in the European zone, in the Eurozone, and more like we do between the states here in the U.S., or is that just a falsity?
No, I'm sorry, Andrew. Look, I was going to say, I think context is important here. I know you have different regulators, different states, and all that kind of thing. But France and Germany, had barriers that physically stopped people doing a lot of this stuff because they had different currency. And just because they don't use different currency doesn't mean to say they don't have different processes. They don't have different rules, and effectively, they're all still there. So there is a lot more. There's a lot more history and experience of having to send things across border, even if we're all part of Europe.
So let me give you a perfect example of exactly what Paul's talking about. When I was setting up my new business account, I went with a Belgian-based bank who offered me a bank account that could reach, I think it was like 30 different currencies, right? So this, for someone who's internationally on the move, this was great. Now, that bank is in Belgium. I live in Germany. My accountant wanted to set up a portal where I could basically send in all of my receipts and that they could tap into my bank account and then just make sure they compared everything and automate as much as possible. However, the German system does not work if the IBAN is not a German IBAN. And therefore, I have to manually download everything, put everything into a folder, and then send it over to my accountant once a month. Is it a huge pain? No, because I'm one person. But this goes exactly to what Paul was saying, is that the German system that my accountant uses is for German companies located in Germany with German bank accounts. I don't live in Belgium. My employer is in Belgium, but I am in Germany and my accountant is German. And yet this system doesn't work, even though Europe, the whole point of the European Union is to create one market. De facto, we don't have one market. There still are barriers. I mean, I can give you another example would be IBAN discrimination. So, for example, often when you sign up for some type of subscription service, let's say a cell phone contract, for example, when you get the mandate form to get set up for a direct debit, the first two letters, the country code of the IBAN, will already be filled in, i.e., DE for Germany. And so with my business, that doesn't work because my IBAN is Belgian, and therefore, and this is, by the way, illegal. And the commission has been getting lots of complaints. There was a lot of protests about this from fintechs. There's been petitions going around, but this is just another practical issue where something that shouldn't be happening is being hindered by old ways of doing things, even though the SEPA came around in 2008. I mean, this is 17 years and it's still happening.
Okay, this has been a long conversation. I'm having to break it into a couple of different parts. What have you thought so far? You can leave comments, you can leave information, down below, and, let me know what you think. Of course, as always, if there is somebody you think that needs to be on the payments podium, go ahead and send me a message, or, if there's a topic maybe you want to get addressed, maybe you think that there's a special edition like this. I'm going to be doing more special editions like this. I plan on doing them quarterly, probably with my friend Ted, some more of those with Fintech Confidential. If there's a topic you want to get addressed, let me know. I'll make sure it gets addressed. Otherwise, for now, I got to say, class dismissed.
There's a world out there, it's a digital maze where dollars move in mysterious ways. Complex systems, rules, and regulations. The payments professor sparks revelations. No